Hey everyone, it's Alyssa Bryden with Virtual Heights Accounting. So you have a new employee and you're trying to determine their province of employment. And you don't know which TD1 form to send them. So you know you have to send them the federal form, but you also have to send them a provincial form. In order to figure out which provincial form you have to send them, you do have to determine their province of employment, called here the POE. And a province of employment is determined by three things: the type of income, the residency status of the employee, and the establishment of the employer where the employee reports for work. Okay, so for income tax, CPP, and EI withholding purposes, an establishment of the employer is any place or premise in Canada that is owned, leased, or rented by the employer where the employees report to work from which employees are paid. So that means if you have a BC employer that has a head office in BC, but they also rent a office location in downtown Toronto in Ontario, they have a leased space in Ontario. Any of the employees that are reporting to that space in Ontario for work would then be deemed to work at that establishment in Ontario. They would then get a TD1 form for Ontario. But we have a lot of remote workers now. What happens if they're not reporting to work at a physical location? If you have any kind of concerns, considerations, we do recommend you head to this site. And there is actually a really great tool that it's to answer interactive questions to allow you to determine whether or not your employee should receive, for example, the TD1 form of the province where you are located, your head office is located, or if it should be, where that individual is located, the province where they are located, or maybe even another province. Okay, so we're gonna make up a pretend employee and take a walk through this interactive question. So we'll answer a few questions here. What is the type of income for the new employee that we just hired? It's going to be employment income. When the income is from employment, you need to consider the employee or the employer's residency status. Well, we know our employee is a resident of Canada. Does the employee report for work physically at an establishment of the employer? This employee was actually hired as a 100% remote employee. They work from their own home office. And we know that if you take a look at examples for temporary work offices, the a home office is not considered a permanent establishment. So no, they do not report physically to anywhere because they work from their home office. Based on the conditions to consider, was a full-time remote work agreement made? Yes, they are under a full-time remote working agreement. Based on the indicators to consider, you can determine if the employee is reasonably considered attached to an establishment of the employer. Indicators to consider for the employee to be reasonably considered attached to an establishment of the employer is here, and you can go over all these indicators here. There are considerations at this point as to whether or not there is some kind of physical establishment, or whether or not maybe they're actually even using their home as a establishment of the employer because they are maybe having customers come to their home or something like that. So you'll have to consider all these different rules. In this case, no, they're just working from home. That's it. Employee works in Canada but does not work never physically and is not considered attached to an establishment of the employer. Then we use the place of employment, POE, is the province or territory where the establishment of the employer is from, which the employee's salary is paid, is located. So that means in this case, with the BC employer that hires an Ontario employee, the BC is the head office, the the employee in Ontario works 100% remotely and from their own home office, and they don't hit any of the other boxes as to being considered a permanent establishment. In that regard, under their employment agreement, they are an employee of BC, and we use a TD1 form for British Columbia. Okay. Note that POE different from province of residence. So you can be employed by a BC employer and have to complete a TD1 form for BC, even if you live in Ontario and are resident Ontario. Those are two different assessments. However, when you file your personal taxes, you are going to pay taxes as an Ontario resident if it is that case. So, or your employee will pay taxes as if they are an Ontario resident. So that means there may be a bit of a discrepancy. If in this situation, BC employer versus Ontario, the Ontario personal tax rate may be a little higher. That means they're going to owe at year end. So a good thing to do is consider whether or not there's going to be a difference at year end to your tax rate. You can always use that additional tool on the TD1 form to add some additional tax. If it's the other way, if you're remitting more, you can wait and get that back when you file your personal taxes. Or there is ways to get that officially reduced. The employee has to do this. And if we click in here, and of course it didn't work there. All right, it worked that time for me. So if an employee wants to reduce the income tax deductions, there is a way to do that if the province of residence of the employee actually is at a lesser tax rate than the head office, and you're required to fill out the TD1 form for the head office. The employee can complete form T1213, request to reduce tax deductions at source. Or do a written request to the Sudbury Tax Center. The employee has to do this. Once they receive the response back, you can then provide it to your employer, and they'll be able to then reduce it to as per what the letter said. So after you receive the letter of authority from the employee, the employer is able to keep the letter on file and reduce the income tax deducted per the letter. Okay, so that's what you can do in the result of a discrepancy. If you're going to owe more, just add some additional taxes so that you don't owe when you file your personal tax return. If you're in a situation where you're paying more than you really should because you're in a province that has a lesser income tax rate than your employer's province, then you can go ahead and do complete form 1213. This is not sent to your employer. This is sent right to the tax authority, and the tax authority then will send a response back. The letter of authority can be provided from the employee. Okay. Once that is done, then they should be okay. You should be okay to then match your hopefully balance owing payable to what's going to be filed on your personal taxes, or what is going to be filed on your employee's personal taxes. So as you can see, this can be pretty complicated. We do really recommend this tool, Determine the Province of Employment. Use the interactive tool. There's also a lot of full text, a lot of various examples of situations that'll walk you through for situations where you would in fact use the employee's province for their TD1 forms. There are cases where we run into with a lot of fully remote workers. We are seeing those TD1 forms not aligning with their residency. So it is causing some confusion. So if you are an employee or an employer, you both could come on and take a look at this walkthrough to see if things are being done correctly. All right, thanks. Have any questions, reach out to Virtual Heights Accounting. Have a great day.